Welcome back. You're watching Money, Money, Money. This week we are in conversation with Costa Belapurkar of Morningstar India. We've just discussed a lot of those NFOs, new fund offerings that are out on the street. And now it's time for another interesting conversation. Recently, Morningstar came out with its global analysis of mutual funds, the global AMC community. And Costa, this was really interesting because in the report, when it comes to fees and expenses, on that scorecard, India is actually below average. I mean, there are the top category countries like Australia, Netherlands, New Zealand, Sweden. There's above average, South Africa, even Thailand, the UK. The average countries include Denmark, Japan, Korea, Norway. We are below average, but we're not alone. There's France, there's Germany, there's China, and if you want company, even Singapore, by the way. And then the bottom category includes countries like Belgium, Canada, and Taiwan. Is that bad when it comes to fees and expenses?
Okay, so let me clarify what this report intends to do. So this report essentially compares 25 geographies across the world on different parameters. So fees and expenses are obviously one part of it, but we look at regulation, we look at sales practices and other things. So if you look at India's overall sort of investors, and this is an investor experience study.
Okay.
So India actually ranks average on an overall basis. Okay. And we're actually top of the pack in terms of, say, disclosures and you know, sort of some of those parameters. Disclosures being, you know, being portfolios being disclosed and things like that. So disclosures, transparency to investors. I think we're amongst the best, just along with the United States, no one else. Okay. On the fees and expenses pillar, there are a couple of observations that so obviously we try to compare all 25 geographies, but there are a couple of caveats here, right? So one is, so if you read our report in detail, we say that India is, you know, for equity funds and balanced funds, amongst the most expensive expense ratios in the world. Okay. We're one of the few geographies that have expense ratios in excess of 2%. All right. But at the same time, when you look at money market and fixed income, we are fairly competitive. Okay. So that's why India doesn't get the bottom grade on fees and expenses. That's one of the reasons. The other reason is that we are an all bundled expense ratio. And that's where some of the debates started to run. So what we mean by bundled expenses is that there's a management fee component, you know, which the asset manager charges along with the other costs that he incurs. And there's a distribution component that's embedded into the expense. Yeah. So over and above that,
which now we're supposed to be told. I mean, that should also be a clear disclosure as to how much of that expense ratio is actually going to distribution and commissions, right?
That's right. So it's more about each individual getting to know what his distributor makes through his portfolio. But you know, the point that I was making is that the entire fees is one flat fee. So as an investor, I can just go to a distributor and I get charged the expense ratio of the fund. I do not pay anything above that, right? In some of the other markets, and that's what's happening globally now, is they're trying to break the two up. Okay. And that's happened in most of the larger markets, where you say that, okay, we unbundling the expenses, which to our mind is a better experience for investors, and I'll tell you why. So basically, you break out the management fees, you break out the distribution commission per se. So when you get into a fund, you're paying the management fee, which is a lot lower than the overall expense. Okay. And then you pay an advisory fee or a platform fee as per the services that you get. If you're getting a pure execution, you'll end up probably paying only a platform fee. If you want advice or you want some level of financial planning, so the value that you derive is the fee that you pay. Right now, from our context, and we can understand, you know, India is obviously still a growing market. Investors are still opening up to the idea of mutual fund investing.
And these products are still being pushed through these distribution channels. So therefore,
and that's why we've acknowledged that yes, it's understandable that India is still higher than the others. So obviously we are higher than the others. Okay. But it's an understandable zone. Okay. But at the same time, the regulator is obviously making, you know, some of the questions that he's asking, that once we're growing, like I said, there are two elements, right? The distribution fee, now distribution is still hard to reach. You're still getting down to, you know, the lower levels or the smaller cities. So there's a cost involved to that. But I think where the regulators also come from, as the assets grow, the management fees, the asset managers that they charge, you know, their economies of scale really kicks in.
Sure.
You know, that's probably where I think the regulator is trying to look at.
So a couple of questions. First of all, as you said, that India is probably one of the few geographies where the expense ratio is in excess of 2%.
That's right.
We right now, I think, roughly would be in the range of 2.5%.
Yes, so I mean, it depends on the fund size. Some funds would be about 2.2%. And that'll come down marginally because the regulator has reduced expenses on one element by about 15 basis points. Right. But yeah, we still, on an average, when we talk about investor experience, what an average investor pays is still in excess of 2%.
So we are in the below average category at about 2 to 2.25%.
Yes.
The better ranking countries, the above average countries, or even the average countries, what is the total fee over there?
Yeah, so if you look at just the expense ratio for the fund, it could be as low as 60 to 70 basis points in a country like the US, which is obviously the top ranked country.
Okay.
But some of the average countries would probably be in the range of 1 to 1.5%.
Yeah.
Now, the other point that's very important to articulate is the direct plan, right? Now, we have all the ammunition to become a cheaper country. See, the study was meant to look at, on an average, what investors are paying to buy a fund, right? And India, because traditionally most of the investors have been in the regular plan, and if you look at the numbers, about 86% of equity investors are in the regular plan. And again, that is understandable. Given that
we need hand-holding, and very few people would understand enough to just go and buy a fund online.
Correct. So, but the direct plan also needs to start picking up now. It's been almost, actually more than 5 years since the direct plan was launched. I would say 14%, because there are enough savvy investors in the country who are your sort of do-it-yourself investors.
Yeah.
The question that we need to ask ourselves as an industry is: are we doing enough to promote direct
plans?
As an avenue. At least investors need to be aware of that.
Okay, well, I guess there's still some room, I think, for slightly better priced products, as you just told us, because some of the global examples are at better levels, lower expense ratios than where we operate. Well, that's interesting and enlightening information. Thank you, Kaustav, very much for taking out the time and helping us decode a lot of this stuff.
My pleasure.
Well, that's it on this week's edition of Money, Money, Money. Do tell us what you think of the NFOs or the whole expense ratio debate. Your feedback, comments and queries are always welcome. We'll see you again next week.